$1.68. That too was a beat. $1.42 was the comparison, but nonetheless, now the stock's down about 0.8%. But we're going to dig into the quarter in just a moment. All right, Charlie, take it away.
Right, iPhone revenue. Just want to add to the Apple numbers here. iPhone revenue $65.60 billion. Estimates on Apple $60.33 billion. You mentioned the revenue number. I'm going to repeat: $111 billion. Estimates there, $103 billion. First quarter EPS, $1.68. Estimates, $1.42. So certainly keeping an eye on Apple. Also after the bell, a lot of big tech names. Facebook's fourth quarter sales jumped 33%. Online shopping during the pandemic fueling demand for digital ads on its social networks. Still, the company's warning of significant uncertainty in 2021 says it may not be able to grow as quickly in the second half. Also out, Tesla reported a lower than expected sixth consecutive quarter of profit. Shares down roughly 6% in post-market trading. The Palo Alto, California-based company reported a fourth quarter profit of 80 cents a share on an adjusted basis, falling short of analyst consensus estimate for $1.03, well below the blowout of $2.14 a year ago. And our coverage of Apple, Tesla, Facebook will continue. Again, repeating Apple's first quarter revenue, $111.44 billion. Estimates, $103.12 billion. It was a down day on Wall Street today. The Dow, the S&P, NASDAQ, all moving lower today. In fact, stocks extending losses in after-hours trading after disappointing earnings from tech giants and amid growing concern that equities have become overvalued. S&P down 98 points, a drop of 2.6%. The Dow down 633, down 2.1%. NASDAQ down 355, a drop of 2.6%. 10-year yield 1.01%. Gold down 0.5% today to $18.42 the ounce. And West Texas Intermediate crude up 0.1%, $52.65 a barrel. Federal Reserve officials left their benchmark interest rate unchanged near zero as they flagged a moderating U.S. recovery and reiterated a pledge to use all available tools to support the economy during the coronavirus pandemic. Again, recapping equities lower, S&P down 98, down 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. Apple shares just down about 0.8% in the after hours. Some of the highlights are Ian King on our live blog saying it is the first $100 billion quarter for the company, and the iPhone revenue definitely blowing away estimates. Services now easily the second biggest contributor of sales at Apple, thanks to our Ian King at Bloomberg News. Hey, let's bring back John Ehrlichman, anchor of BNN Bloomberg's The Open. He's on the phone from Toronto. Looks like a pretty good quarter, John.
Man, I
as always,
I don't
right?
think we should underestimate. Speaking this big numbers game with big tech, the symbolism of reaching $100 billion, or I guess in this case more than $111 billion, as you just pointed out, how unprecedented this really is in corporate America. I mean, there's just a handful of companies, and in the next few days, I'm sure we'll be talking about the mighty Amazon. But think about the business of Amazon, at least for the most part in their growth. Yeah, they've got the cloud business, which is astonishing. But really, it was about moving goods. Walmart, we know, has already reached that threshold of being able to generate more than $100 billion in a quarter, and it's impressive. But again, the nature of Walmart's business is different. It moved everything we can, and our margins are razor thin. Apple, there are limitations on how far they'll go in selling product because they like those big margins. So I think going back to what we talked about earlier with people staying home during the pandemic and scrolling through Instagram, they were indeed getting new iPhones. Right. And, you know, if the kids were at home, they were buying some of the other gear. And then there's that services business, Carol, which is the leg of growth they're leaning on right now.
John, where else, though? I always think about my European grandparents who came over, where else would you get a product that's roughly, especially if you depending on which model, but you can spend $1,000 on something that you are going to consider disposable because at in a couple of years, you're going to replace it or maybe sooner. I mean, we've got 2 new iPhones in our house. I just look at, I understand what you're saying, like the limitations in terms of, they want to stick with those high margins, but it works for them. Like everybody said, you got to go mass market, you got to go down market. Well, maybe you don't.
Well, and we should be clear, again, there were pandemic winners. And Apple clearly was one of them, because there was just that simple need for us to make sure we had good tech at home. And when you're a consumer and you're making a decision, you might have to cough up a little bit more for an Apple product, but you're pretty confident in what you're getting with that product. Now, the question becomes, if you were busy buying Apple stuff last year, are you going to need to go out and get something in 2021?
Right.
I think that's, again, why before the pandemic hit, and we've talked for years, Carol, about how, yeah, they still have the big product days, but they're not as exciting as they once were when the iPhone was brand new, or, today, in 2010 was when Steve Jobs first unveiled the iPad, right? It doesn't feel like there's a new flashy product that gets us excited, although I have to tell you, I love my AirPods, and, there wasn't as much fanfare around the launch of those a few years ago.
Right.
So I think you'll continue to see, Carol, this company really focus on their services business. Revenue there was substantial,
right,
at more than $15 billion, and that's things like, yeah, it's what you're putting in the cloud, but it's, getting you to choose Apple Music over Spotify. It's getting you to use the Apple TV service, right in the mix there with Disney Plus and Netflix. And then, if they can sell you on some of the other stuff, wearables is still a growing category for them. People are still picking up the Apple Watch. And I think after the initial excitement of the quarter, we'll probably go back to that storyline of what else does Apple have about the fleet.
That's what I was thinking about. How many times over the years we've said, like, come on, Apple, you've got to diversify, and yet here we are, like, hey, listen, these are pretty impressive numbers. I feel like when we talk about Apple, it's always in a whole other category. Just got about 20 seconds left here, John. Any final thoughts?
The one thing I'll just note is in China, sales were up substantially. They were north of 21 billion. That was up from about 14 billion a year ago. And we know that the China recovery story is something people are already talking about.
Yeah, exactly. And our own Mark Gurman, who we follow so closely also when it comes to Apple, talking about the wearables, home, and accessories boost due to major updates in that line, including, he talked about 2 new Apple Watch models, the AirPods, AirPods Max headphones. John was talking about the headphones there, and also the HomePod Mini. So he said Apple went out all on accessories this past quarter. John, great to have you back with us, breaking everything and anything you need to know when it comes to Facebook and Apple. John is anchor of BNN Bloomberg's The Open, correspondent for CTV National News. Speaking of news, let's check in on world and national news. Here is Nancy Lyons. Hey, Nance.
Hey, Carol. Well, cracks may be emerging in the Senate's push to hold a second impeachment trial against former President Trump. Bloomberg's Nathan Hager has more from Washington.
Democratic Senator Tim Kaine says censuring former President Trump may be better than going through with an impeachment trial because it's clear that most Republicans won't vote to convict him. Kaine tells reporters time for a trial might be better spent on COVID, which he thinks is just so dire right now, in his words. But after Kaine's comments, Senate Majority Leader Chuck Schumer took to the Senate floor and said there will be a trial. Quote, "We will vote, we will pass judgment." Senate Republican leader Mitch McConnell is reiterating that he will listen to the evidence against former President Trump. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Department of Homeland Security has issued a warning of the potential for domestic terrorism from people motivated by anti-government sentiment after President Biden's election. White House Press Secretary Jen Psaki.
We must prepare to draw on information collected and analyzed by our intelligence community, which is something that is ongoing, and to work and also to continue work with our allies to evaluate the report's credibility on the investigation once it's done.
The department is not citing a specific threat, but points to a heightened threat environment across the country. A Senate panel has advanced the nomination Pete Buttigieg to be Transportation Secretary by a 21-3 vote, setting up a floor vote possibly later in the week. Global news, 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, and joining me once again is our own Charlie Pellet, who, as many of you know, is the voice of New York subways. If you've been on a subway, although not many people have as of late, we know ridership is down because of the pandemic. But nonetheless, there are folks from the MTA who are showing up every day and making sure that a lot of New Yorkers can get around the city, Charlie.
Indeed. And what the MTA is doing here in New York City is they've got an underground series of pictures paying tribute to the men and women. These are frontline people who keep the subways, the buses running, and they have lost a lot of lives in the past year because of COVID. At least 136 employees, MTA employees, have died from COVID-19, all but 6 running buses, subways, paratransit operations. And what they have done is they have created a series of photographs to memorialize, to remember the men and women who've passed away from COVID. And these photos are going to be on display various times of the day at 107 New York City transit stations, various times of the day. And I just ask riders, people who are on the subway system, just to stop, just take a look at the pictures and just remember these are real people, real families, and a real loss. But these are people who are out there making big sacrifices, and should point out, too, that many of these people, most of these deaths really coming during a 4-week stretch of late March, late April of last year. Again, 136, at least 136 men and women no longer with us who toil every day on the subways.
Well, these are the real frontline workers as well. And as you said, it's a memorial video. It's at 107 of the city's 472 subway stations. It's digital screens featuring photos, names, and job titles of transit employees who died from the virus. It's an 8-minute memorial video, and it's going to play twice consecutively, 3 different times a day through February 7th. And it's one of several tributes being planned for transit workers who have sacrificed their lives or their health during the pandemic. And we know, listen, we all count on everybody at the MTA to get back and forth to work during normal times, and even more so during these difficult times.
Well said, and we thank them.
You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple little changed after earnings. It reported quarterly revenue that topped $100 billion for the first time. Worth repeating, topping $100 billion for the first time, fueled by strong holiday sales of the iPhone 12, the company's first device for 5G wireless networks. Facebook after the bell. We had Facebook up now by just about 0.4%. Little change, has been moving all around after hours. Facebook's fourth quarter sales jumped 33%. Online shopping during the pandemic fueling demand for digital ads on its social networks. And Tesla reported a lower than expected sixth consecutive quarter of profit, sending its shares lower in post-market trading. The Palo Alto, California-based company reported a fourth quarter profit of 80 cents a share on an adjusted basis, falling short of analysts' consensus estimate for $1.03 and well below that blowout $2.14 of a year ago. The Dow, the S&P, and NASDAQ all declining today. Stocks extending the drop after the worst rout since October. S&P down 98, a drop today of 2.6%. The Dow down 633, down 2.1%. NASDAQ down 355, down 2.6%. 10-year up 730 seconds, 10-year yield 1.01%. Gold down 6.8, down 684 today, down 0.4%. Gold at 1844 the ounce. West Texas Intermediate crude lower, little change now, down 1 cent. 52.60 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So Tesla is also out. It's been a big day in the after hours for earnings. Tesla shares, I should point out, they are lower in the after hours right now. They're just down about 4.8%. So, listen, it was an outperformer last year, up 743%. It was already an outperformer this year, up 26% heading into these earnings. Growth stock, auto stock, tech stock, battery stock, it's many things. So let's get into it. With Bloomberg News reporter Ed Ludlow. He's with us from our Bloomberg 960 studio in San Francisco, along with Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. He's on the phone from Santa Monica. He owns Tesla shares, owns Tesla cars. Guys, let's get into it. Ed, I'm going to start with you. What jumps out? Because I just want to say, I just saw a headline that Tesla expects to achieve 50% average annual growth in vehicle deliveries. That was in their letter.
Yeah, that was in their letter. The thing that wasn't was basically a stated delivery goal for 2021, right? Consensus going into this was around 800,000 units. And perhaps, you know, the market a little bit disappointed that Tesla didn't just state outright what they think they will deliver this year. I guess you could ask Ross about that.
Well, let's ask Russ. Russ, what do you think about that?
Oh, I think Elon's learned his lessons about, you know, telling people what his goals are, and then everybody jumps on him if he's short. So he's doing what Apple and all the other companies are doing and leaving a little more wiggle room for error. And maybe I think the market's reacting a little bit more towards missing on the EPS side than per se what we expect out of deliveries.
All right, Ed, go ahead and pick up what else stands out for you.
Yeah, you know, and beyond that, I mean, credit where credit is due. Tesla says they're on track in Berlin with the Gigafactory and also in Austin to start deliveries from those locations this year, which is pretty astonishing, right? Based on, you know, how quickly they built the Shanghai plant, they've now brought Shanghai up to installed annual capacity of 450,000 vehicles, which is impressive. And they're basically touting in the earnings release that they expect Germany at least, and perhaps Austin, to go the same way. There is some pressure on operating margins that Tesla says is largely from aggressive price cuts in China. The average selling price for Tesla vehicles came down, which is interesting, right? Because Elon Musk and co have talked for a while about wanting to make their vehicles more affordable, but that is completely at odds with where the rest of the industry is going. We're seeing higher average selling prices, particularly in combustion engine cars. And the final thing is that executive compensation was very high, which ate into margins as well.
Yeah. Hey, listen, well, okay. So I wonder, Ross Gerber, if there's a bit of a pullback, are you going to be buying into this?
Well, no, because we think where we'd like to buy Tesla is much lower than it's going to go tomorrow.
How much lower?
Well, you know, we see Tesla as a buy at around $500 a share.
Okay.
You know, and that's figuring looking at 100 times this year's estimate for us in 2021 of $5. So you know, like, to me, paying $500 is what I would pay. You know, but I also paid $7 for all my shares. So, I don't need to sell. I don't need to do anything. So I'm a holder of Tesla stock as it bounces around here. And if I get a real correction in Tesla, I'm certainly going to add to it.
All right. And what do you like about this quarter? What don't you like about this quarter, Ross?
Well, I like the top line. The top line numbers are great, but I think you guys kind of hit on the topic. Margins were definitely hit, whether it's from price reductions or increasing expenses. They were definitely hit from what they should have been on an operating level, and that, I think, is why you're seeing the stock go down. But I also look at those things as not material in the story of Tesla, which is really about a company that's growing incredibly fast, completely innovating in several industries, and has just the most incredible long-term future of any company I own. So I don't look at this as anything meaningful.
Yeah.
Well, Ross, let's jump into the story that you're describing. If you look at the kind of action that we saw over the last 12 months in the share price, every time a street analyst raised their price target, a lot of that was based on future revenues, higher margin software revenue, robo-taxi. Are you disappointed we didn't hear more about that from Tesla in terms of progress on autopilot? What are you listening for on the call on those kind of value add and other business areas outside of the business of just building EVs?
Yeah, it's funny. It's a great way to look at it. So from a fundamental perspective, a lot of those things like robotaxi, I don't even factor into my analysis, because I look at that as those will happen when they happen. Okay, what matters to me is how many cars they're going to sell and batteries and solar they're going to sell in the next 2 years, and what is the ramp of these products moving forward. So, for example, you brought up the rapid growing of the factories and how quickly they're getting this production up. The one thing I'm laser focused on is on Cybertruck and semi, production and delivery, because that's going to be the next big leg up for Tesla, is taking over the trucking business in America. And so, that's what I care about, because I think it's going to be hard to build the Cybertruck, and we've seen it with every time they build a new vehicle. It's kind of a nightmare. So what I'm really focused on is, are they going to execute successfully with Cyber and Semi in the next 12 months, or is this thing going to get delayed and we're going to run into problems and run into issues that could hurt the stock? So that's what we're really focused on, is the next market for Tesla is trucks. Mm-hmm. We want them to dominate this market, and that's the most important step besides getting full self-driving done, which they're working with simultaneously. But with the new battery cell structures and what they're building on the long term looks amazing. But as far as what's going to drive the stock, it's getting the truck business going.
Ross, do we need to look at this as more of a battery company in addition to being an auto or tech company?
Absolutely. In fact, that's where I think they now have the biggest moat, because every other company trying to build EVs is trying to get batteries from the same three players, and we've now made significant investment in other battery companies and other battery technologies, because basically there isn't enough of this stuff. There isn't enough cells. There isn't